Welcome to ETCFO's Leadership Dialogues. I am your host Shivam Tyagi, and in this dialogue series, we will delve deeper into financial leadership styles, strategy, and vision of leading CFOs. In this very first episode, we are joined by a special guest with nearly 3 decades of experience in the oil and gas sector. He is currently steering the financial and strategic direction of India's largest natural gas company, GAIL India. From LNG sourcing and hedging to mobilizing global capital for key infrastructure projects, he has played a pivotal role across GAIL's growth story. He has served on the board of multiple key entities, both in India and abroad, and brings a wealth of experience across corporate finance, regulation, and investor engagement. Please join me in welcoming Mr. R.K. Jain, Director Finance, GAIL India. Thank you for joining us, Mr. Jain, and thank you for giving us your precious time.
Thank you, Shivam, for hosting me.
Great. Sir, to begin this interview on a lighter note, I want to ask you, when you are steering a behemoth like GAIL, what keeps you awake at night these days?
Uh, Thank you. Actually, we being an infrastructure company, and our goals are largely aligned with the national goals. And national goal is to make India as a gas-based economy. So we are primarily focused to put infrastructure in place so that at least reach of gas is there. And you know that infrastructure is a capital intensive project, and when you put these infrastructure initially, these are not getting utilized. So there is significant amount of pressure comes on low returns, but nevertheless uh, we we are there to make India as a gas based economy. So one way we want to put infrastructure. Second way, we need to monetize these pipelines where lot of investment goes. So those two are contradictory actions, and definitely this keeps me busy or awakes in night, that we have to put infrastructure, mobilize the cash, and certainly the monetization of this takes time, and that's the challenge, and we are there to take those challenges.
Right. And you must have seen GAIL through different growth cycles. In terms of financial leadership and financial decision making, what has been your toughest financial decision that you've taken over the years, and what did you learn from it?
Actually, Shivam, I am there in this organization for more than 33 years. And in these 33 years, I have worked at various sites and various functions. And 33 years is almost nearer to the journey of or life cycle of as on date of GAIL. And there are not one challenge which is there. I have faced a lot of challenge, and this company is very resilient to overcome those challenges. And let me share with you the recent one. And one such decision I consider crucial when was taken when geopolitical situation, or you can say disturbance, happened due to Russia Ukraine conflict. And during that conflict, the spot LNG price went as high as $45 per MMBTU, and the normal price, if you see, of LNG is around $8 to $10 per MMBTU. And under those circumstances, one of our supplier, which was actually supplying us almost 20% of our portfolio, defaulted in that. And then challenge is that we supply to the very critical sectors like fertilizer, city gas distribution, and we also consume gas in our Pata petrochemical for producing polymers. Now whether to continue our operations or to stop the supplies to our legacy customers who are there with us almost throughout our journey. We took a tough call by ramping down our Pata petrochemical plant, and continued with the supply to our strategic or our loyal customers who are there with our throughout growth cycle. Certainly in this challenge we took, and when you ramp down any of your own facilities, certainly there are challenge with respect to employee morale, there are challenge with respect to your bottom line. and there are challenge with respect to your customers who take your output, how to bring them back. And we took those challenges. We ramped down our Pata Petrochemical and continued with the supply to downstream customers. And not only we supplied the gas at the available gas, we also sourced the gas at a price higher than that to fulfill our commitment. But then over in a 1 year period itself, we overcome those challenges, again bring down our Pata Petrochemical to normal level. In let me tell you, in 24-25 we produced more than the nameplate capacity, and I can say highest ever production and marketing we did in last financial year, and these customers are with us. So this was one of the challenge we faced recently, and there are many, but since you asked me one challenges, I am sharing this. This was one of the
Sure.
challenge.
Sure. But in terms of what kind of lesson did come out of it for you?
The lesson is that the first company is ready to be face any kind of situations which we never anticipated that any long term contract or a supplier will default. So that was one challenge. And second, we also learned that how can in such situations we overcome in terms of mitigating those challenges, sourcing of gas to mitigate these volumes. These are the challenges we learned, and we have been looking for further diversification of our sources, so that this situation, if either it doesn't come, but rarely it comes, or if it comes, we are able to take care of those situations.
Great to hear that. When we're talking about changes happening in the business, energy is one such business where you have to navigate very various price cycles, and there are regulatory shifts over the years that also keep happening. So, in terms of energy price cycles and regulatory shifts, what have been those learnings in these areas?
Let me tell you, we are in a business of oil and gas, and in oil and gas, the price of gas varies, significantly, whether it's due to supply constraint, whether due to geopolitical situations, and we are experiencing every now and then. And we have seen recently the crude price went up significantly. If you can go down 6 to 8 months back, and all of a sudden, because of the US policies issues, the crude price has gone down, and gas prices are directly linked with the crude price. We are totally prepared in terms of sourcing of diverse portfolio. We have not only we have the gas linked to the crude, we also have the gas linked with the Henry Hub, so we can balance these things. Secondly, we also have developed our own commodity price risk managing team under our treasury operations. So we continue to take positions in the paper market, so that we are able to address those volatilities. In terms of regulatory challenges, we have a very sound regulatory department, which scans the regulatory changes happening in the market, and they are able to give their suggestions to the regulator. That is one side of it. And secondly, if required, in terms of changes in processes, re-engineering our processes, the both things are being done. So these actions are certainly we take as and when situation arises, and we have a capable team to handle all those challenges.
You mentioned some policy changes that are being estimated or that are happening in the US. One of your sourcing place is the US. In terms of the uncertainty around policy over there, are there any challenges that you are estimating over the coming time?
Actually, the policy change with respect to gas are rather positive for us, because with the change in administration, they are looking for producing more and more gas locally, and then production of more and more gas in the United States means the downward pressure on the prices. So in that context, we are not estimating any changes negatively to our organization. Rather, if there are challenges, the pressures on the prices in say US market, it is positive sign for us, and we will be able to source more and more gas for our domestic demand, because as you know, our is a country which is not blessed with so much of gas in terms of resources. Currently we are almost importing 50% of our country's demand. So if demand grows and there are pressure on prices, say in United States, certainly it is a welcome sign, it is a positive sign for us, and we are looking to rather those opportunities, such opportunities to capture, and will take to our advantage.
Right, right. So, this in this series, we are also, talking about financial leadership and what's happening in finance and how its leadership is has changed over the years. From you personally, I want to ask, since you are heading one of the, largest PSU companies, how is financial leadership? Firstly, how you define financial leadership, and how is it different or same in a PSU versus a private sector setup?
Let me first tell you, in terms of core of financial leadership, there are something which are very common in the creating value and sustainable value, whether you are a public sector or you are a private sector. Ensuring financial discipline, whether public sector or a private sector, aligning financial strategy with long-term vision, it's same. So any private sector and public sector, certainly from financial point of view, looks similar. But in terms of goal, we being a public sector company largely aligned with the national goals. And if suppose infrastructure is to be created, we are not much bothered about good amount of return. Certainly we being a commercial organization look for a return, but we are not crazy that we should get at least this much return, then only we will develop the infrastructure. We believe that infrastructure development takes some kind of initial pressures, but in a longer term it provides a good return. But in private sector, perhaps that may not be the case. They look for the returns maybe right from the word go, and certainly in future as well. As there are a classical example in pipeline business. The private sector has not even laid the pipeline which were given to them on nomination basis or even through bidding route. They are yet to come up. But in GAIL, whatever pipeline are available or offered to us, we have fulfilled our responsibility in terms of laying of pipeline. And we know that once the infrastructure is available away from the source, the hinterland areas, market will certainly come, and we will certainly have those returns, maybe not immediately, in a longer period or life cycle of the project.
Right. So you had mentioned, hedging that you do for geopolitical uncertainty and other policy changes that keep happening. So in terms of this core finance area, how do you think it has changed over the years? What is your current best practice or instruments that you are doing vis-a-vis what, how do you think it has changed, and what are you currently practicing?
Actually, we in GAIL have started this commodity hedging under treasury operations way back in 2016. And we felt the need of the commodity hedging under treasury operations, because more and more imported gas started coming to our market. Prior to that, you know that lot of domestic gas was available to meet the demand, and we were using that. When we started importing gas, in order to address the volatility, we thought that we should have a commodity hedging team. That's how we started in 2016. And there were three primary objectives of having this policy. First of the objective is to, whatever consumption of gas we do for our internal consumption, we should be able to predict or estimate what kind of price we will have of gas for internal consumption through paper trading if required. Second, in order to make the gas marketable. Suppose a customer believes that he is comfortable with the Henry Hub gas, So we have ability to swap the crude based gas to Henry Hub, or if he believes that crude linked gas is good enough for him, we are able to swap our Henry Hub to crude, and that's the ability we have, and we take the hedge on our account and are able to offer that product. And third, also we that's a customer specific. If customer, we also has the have the ability to take hedge on our portfolios. So in order to increase the marketability of our gas, in order to make the predictability of gas which we consumed internally, we started this, and certainly it is helping us a lot. And regarding the product, largely we use the swaps as a product for hedging.
Right. So, coming to the business or aspect of GAIL and what's going on recently, the company came up with its, FY25 numbers and Q4 numbers. The show was decent. And over FY26, GAIL has guided for around a capex of around 10,000 crores. Can you walk us through this, how this capital will be allocated across key segments like pipelines, petchem, and renewables?
Yeah, we have estimated a capex of around 10,700 crore rupees for financial year 25-26, and large part of this capex will go to pipeline infrastructure, around 2,700 crore rupees, the 3,000 crore rupees of capex on petrochemicals, and around 1,200 crore rupees of capex on net zero. As you know that we have announced that our company will be net zero by 2035 for scope 1 and scope 2. Earlier this target was 2040. We have actually brought down the target to 2035. So we also have planned almost 1,200 crore rupees of capex on net zero investment. Then we have almost 27, 28 joint venture and subsidiaries. So we have almost 1,400 crore rupees of part of capex as equity investment, and we have almost 1,300 crore rupees of operational capex to maintain our plants and pipelines, and remaining capex we will incur on CGD, the E&P, and other projects.
Right, right. So the last fundraise by GAIL was about 3 years ago. Are there any new funding initiatives that the company is planning to take to fund its, infrastructure development, capex, and even in FY26, FY20C, there will be plans to expand. So, how is the company planning to fund this?
If you talk of a long-term borrowing, yes, we had taken almost 2 to 3 years back, and since then we were not required to take long-term loans because we had a good internal generations. But certainly we took the working capital loan in order to take care of mismatching of cash flows. If you talk of 25-26, we are expecting that we may borrow around 5,000 crore rupees to 6,000 crore rupees of loan on a long-term basis. But again, this is subject to the internal generations. If there are better internal generations, this figure may change.
Right, right. And the company is also going through some changes in its tariff review. So what is the status of GAIL's integrated pipeline tariff review, and how much upside are you expecting from that?
Actually, our integrated pipeline carries almost 90% of volume whatever we transport, and currently the tariff for integrated pipeline network is 58 rupees 61 paise. In August 2024, we submitted our tariff review petition to regulator, and in terms of review petition, the tariff submitted is 78 rupees 72 paisa, and the regulator is seized with processing of this our review petition. And recently they have carried out the public consultation. The stakeholders have submitted their comments to the regulator. We were required to submit the response to the stakeholders comment. That also we have submitted on 23rd of this month, and now there is a open house which is scheduled to be held on 28th of this month. We expect the regulatory process in terms of finalization of our tariff may end by around, say, second week of June, and and we also expect that regulator will notify our tariff, and that may be applicable from 1st of July 2025.
Right, right. So, any upside on the top line?
Yeah, certainly we are expecting the tariff to be at least 72 rupees, even if on conservative basis, even if regulator moderates. This I am telling based on our past experience, how the regulator moderates the tariff. So that means around 12 to 14 rupees of increase over 58 rupees. That means around say 23-24% kind of increase we are expecting to our bottom line, because this will directly go to bottom line. Our expenditure remains same, and the if revenue goes up, it will directly hit to our bottom line.
Right. So, in terms of energy transitions, GAIL has also recently commissioned a green hydrogen plant in Madhya Pradesh. And I want to understand what is the vision behind this, what will be the outcome of this, and what is the broader strategy that GAIL is behind while going after green hydrogen.
Yeah. So we are in a gas business, and we are far better as compared to our peers who are in other fossil fuels. So we are better placed, but still we are not complacent. Even though we know that gas has a longer term in terms of its uses, and gas is considered to be a transition fuel. But in order to make ourselves future ready, we are working on various other alternatives like hydrogen, renewable energy, and compressed biogas. So, if you talk of the hydrogen, we have successfully commissioned 4.3 ton per day of hydrogen production plant at our Madhya Pradesh unit. And the primary purpose of putting this plant is to make ourselves ready. We understand how hydrogen works, and how can it be scaled up. So this is only on experimental basis, and it is working nicely. In terms of renewable energy, we have almost 145 megawatt of portfolio. Out of that, 118 megawatt is wind and 27 megawatt is of solar projects. But we have a target in terms of our strategy 2030 to increase this portfolio of renewable energy to 1.7 gigawatt, and we are working towards that. Thirdly, we are also there in CBG. We have recently commissioned one plant at Ranchi. See the CBG based plant, and so whatever alternative fuels are coming, we are working towards that, so that we achieve a capability. When the transition really takes place, we are ready. And also the challenges in terms of storage. Say in hydrogen, there are storage of transportation and storage. So we are also working towards to mitigate those challenges. So we have injected 5% by volume the hydrogen in one of our city gas joint venture company, Avantika Gas, and that has been successfully done. The purpose of that experiment is to see the impact of hydrogen injection along with gas, how it impacts the metallurgy of pipeline. And when actually the hydrogen becomes a future fuel, are we future ready to take care of those challenges? Because transportation is one of the significant challenge for hydrogen. So all in all, we are working towards all other alternative fuels, so that when actually transition takes place, maybe 30 years, 35 years, 40 years down the line, gas becomes takes plateau kind of thing or start going down, we are ready to take challenges, and we are future ready.
Right. So, in terms of, see, you mentioned that green hydrogen is an experimental initiative as of now, and there are experiments going on around it. While wind is majority at this point, CBG is also there, and solar is also there. Going forward, will wind be the majority, or there are plans to increase the stake of other renewables also?
We are working to more towards solar energy, and though we are not averse to wind, but when I'm talking of 1.7 gigawatt of renewable energy, but largely it may include the solar part of it.
Right, right. So, sir, we are going through a digital transformation as we speak, and when we hear the news, almost every alternate day we are listening about some tech innovation that is coming in, being used in the companies. We are also hearing about a lot of layoffs in the private sector that are happening allegedly due to technology and companies restructuring their employee strength and employing more tech driven decisions and outcomes. So in terms of digital technology, where is GAIL at currently? How is it leveraging it? Things like data analytics in finance, we are hearing a lot of its use in the private companies and setup. Where is GAIL at in all this?
Let me tell you, GAIL is way ahead of any peers or even private sector in terms of utilization of uh, benefits or AI or any other form of technology. Uh, we have we have significantly changed our processes. We have put vendors invoice management center at sector 62 Noida. Uh, Prior to that, our vendors invoices were passed at all the sites wherever the vendor is working. Now we have established a state of art technology center at Noida. Whole country's bills are processed there. Let me tell you, the earlier the processing time was around say fortnight. Now the invoices in finance are passed in 1.5 days. That's the maximum, 1.5 days. And this is how this has happened, because 93% of the invoices are coming digitally to us. So they are coming and being processed almost same day or maybe next day if it has come in evening. It is transparent, faceless, and without any documents. That is one significant change we have done. Another change we have done in terms of putting central invoicing center again at Delhi. What we are doing earlier, the customers invoice we are doing from various sites where gas is being supplied. Now this also is center we have placed at Delhi, where the speed of processing of invoice is very fast. Uh, Third, we have also centralized claims of our employees at Jaipur. Again, the lot of things we have automized. We are using AI. We have defined the processes in the system, and there are 40% bill which are processed in a fraction of seconds, because we have defined the rules. And they, as soon as the bill is submitted by employee, the AI takes care and bill is processed. So these three, there are many. Now these three initiative is helping us in terms of uniformity. If you do all the activity from one center, it becomes the uniformity, because there is no difference in the activity if you are doing from different sides. Say human interventions is not there. Second, transparent, faceless. It is avoiding the paperwork, and it is certainly giving a lot of confidence to the stakeholders. So this we are doing. We have also put the Sahyog portal. Now I have shared the invoicing side. From payment side, whenever customer makes the payment, there is a internet based portal, Sahyog portal. The customer has the ability to give the details of payment to their portal, and it goes to our accounts and clear their accounts. So that is another thing we have done, and we are going for S4 HANA. Next month we are going to shift from our current ECC platform to S4 HANA. And Then we are going end to end. We are going to cloud instead of on-premise solution. We are also India's first company to adopt Swift platform for SBLC and BG, which is totally paperless. Now, whosoever bank is ready, and wherever the stamp duty of these LC, BG, the states are providing, we are receiving our LC, BG electronically right from the receipt till invocation. This is being done. And considering these our all actions, we got a lot of award, and two successive years SAP has given us SAP S award recently in 2024 also, for our treasury for our employees trust related issues. And we also got the automated data submissions award from PPSC for our automated data solutions, PPSC Green Tech Data Excellence Award in 2025. So we look for any given opportunity to use the technology, and it has significantly helped us to reduce the implication of manpower on day-to-day requirement. So we are way ahead, and a lot of organizations comes to us to even see how we have done it in whether you talk of WIM, whether you talk of centralized employee processing claim, and we are proud of that.
Right. Sir, I want to ask you this to understand the vision of the company right now, in coming years. What are those, three strategic priorities for you and for GAIL for FY 26-27 that investors should watch?
One of the topmost priority for us is to create infrastructure, because this is big thing. If you create the infrastructure in terms of pipeline, the excess of gas is available. That is most important. Like in road, unless you have road, how traffic will flow. So we are conscious of that. At currently, we have 16,500 kilometers of pipeline, which is almost 70% of national infrastructure. We are in the process of laying around 4 to 5,000 kilometers of additional pipeline. So our focus is also on creation of infrastructure. Second, in order to make country as a gas-based economy, we are also there in market to source the gas. So we are able to provide the gas to our customers at an affordable price, and also we will be able to utilize our infrastructure which we are putting for that. And third priority, though it is linked to second one, we want to, now once we have put the infrastructure, we want to monetize these pipelines, and it is not in terms of gas marketing what we are sourcing, also in terms of transmission of volume by shippers. We, because in terms of regulatory requirement, we have to have 25% of pipeline as a common carrier, and certainly we look for more and more shippers to use our pipeline so that these pipelines gets utilized. So energy security, the demand built up in new pipeline, and also creation of infrastructure, these are the topmost priorities for us.
Great to hear that. Lastly, I want to ask you, what advice would you give to younger finance professionals who are joining the profession or are into the profession for about 5 years, 10 years, and they are aspiring to be the CFOs of the leading companies? Over the years, what kind of learnings have you seen for yourself and around your colleagues, and what advice would you want to give them at this point with the amount of change that we are seeing in this world?
Yeah. So current CFO role is different than the than the time when we joined 20 years, 30 years back. It's not a CFO is not for numbers, making accounts, making balance sheet. It's like a shaping of organization directions. Where should organization go? We are business partners. Earlier, finance used to be a critical function, or a function which questions rather. We believe that we are a business partner. We have to go hand in hand. We have to work with all other colleagues in the different departments, so that we have more and more business opportunities. We are able to take care of that. And if we are to achieve the organizational goal, we have to be hungry enough to do anything, because today we are not to do the routine job is being done by machine. As I told, we have to see how can we bring in business, how can we optimize our tax, how can we do better treasury functions, so we can reduce our impact of interest. So that's the work, not the work of making accounts, clearing files. So the today's role has been changed. And one important work, the thing which I believe, and I normally say, challenge the status quo. Whatever work you are doing today, whether it's right or wrong, can you do it differently? Certainly, I have experienced that whenever you are challenged the status quo, you are able to do the work differently in a more efficient manner. You have to be more agile than in past, because competition is such that if you do not be take actions, you are not agile, somebody else will come and take your business. So role of today's finance professionals have significantly changed, and they have to work differently than they used to work earlier. That's what I will tell.
Right, right. Those are some, very important points that the CFOs need to be aware of in this day and age. And I will personally take some learnings from that also, changing the status quo is a great advice for any professional, be it in finance or in media or any professional that you are in.
And why I said challenge the
Yeah.
status quo, we everyday challenge. When you start from your home to office, right? Why you put GPS? You know the way. But putting GPS, you solely are challenging status quo because GPS can give you an alternative route which reduces your time. There's a small examples of challenging status quo. Otherwise, subconsciously you can go with that route. So challenging status quo, certainly you have that route, but can you bring in more efficiency? And when you do so, you will be able to arrive at a better solution.
Right. Is it also to do with the, since I asked you this question in the very beginning of this interview about leadership, financial leadership. So is it also to do with the leadership style? Hearing more ideas, hearing new ideas, then from top down approach to bottom to up approach?
Actually, I will tell you a different way. Certainly, it helps when there is a top-down approach, but nowadays younger generation is smart enough, or they are more aware, more knowledgeable. Now, only challenge is to channelize their energy, channelize their knowledge, and to that extent, the role of top management comes. Because whenever I meet from the younger generation nowadays, where we recruit, they have better ideas, they have more ideas, they are more aware, more knowledgeable. But the question is, are you able to channelize their energy? Are you able to use their energy? I think it's a mix of both. The energy, the knowledge can be rightly channelized. That's how I look at it.
It's about channelizing what they are offering at this point in time of history. Well, on that note, thank you so much, Mr. Jain. I am sure that our viewers got a unique perspective around what plans the company has for the future and what vision you have personally for the company. Thank you so much again. It was
Thank
pleasure
you.
hosting.
Pleasure here.